So what is stagflation? Well, simply put, stagflation is rising inflation at the same time as we're seeing slowing growth. And usually stagflation happens when there's a shock to the system. We've seen it in the past with a sudden rise in oil prices. Oil prices can act like an added tax to people. And so if you're paying more at the pumps, you're not having as much money to spend in the economy. So we're seeing growth slow. But higher oil prices can also cause inflation, as we've spoken about on this show many times, to rise. So a spike in oil prices, a significant shock or significant hike in oil prices can definitely cause stagflation. Today, the Bank of Canada has been talking about stagflation because we've seen a spike in interest rates, yet inflation still remains high. Spike in interest rates causing a slowdown in the economy, but yet inflation remains high. And that inflation has continued to be sticky. One of the reasons I think the Bank of Canada mentioned this past week when they said that they seem to be fighting the federal government. Federal government continues to want to do things, spend money, raise wages. Wage inflation has been an issue at times. At the same time, Bank of Canada is trying to raise interest rates to lower inflation. So Bank of Canada mentioned that perhaps the government and the Bank of Canada are not really on the same page. And that could be a one of the problems why we're seeing or we're in the predicament that we are. Bank of Canada still wants to bring down inflation to the 2% level, but they don't want to put us into a recession. And as I mentioned in the last segment, we're seeing growth numbers actually go negative in the second quarter, and many are predicting that we will see a negative third quarter as well. And as we all know, 2 negative quarters back to back says we are in a recession. People are calling it a technical recession, a mild recession, whatever you want to call it. It is possible that the next numbers we get or we receive over the next couple of months could tell us that during Q2 and Q3 of this year, we are, or we have been in Canada, in a mild recession. Now, does it feel like a recession? Probably not. And that's because most people are working and earning a wage, and those wages have been going up. So for most people, it won't feel like a recession, but technically, we could be in one. And we have a few charts here that I wanted to show. First chart, Canadian monthly GDP numbers. And you can see here that we're pretty much at the flat line now, coming down from, I guess, January 2023. So just in the last year, you can see how much GDP has come down. And now we're sort of tipping over into the red, into the negative. The next chart that we have here also clearly shows how Canada annual GDP growth rate has come down. You can see here on the far right-hand side, just over 1%. I think we're going to see that go even lower, closer to the flat line as well. You could see last time we saw some negative numbers back in 2020, 21, 2023, obviously, where we're today. I think we're going to see some negative numbers as well. And our last chart here, comparing the Bank of Canada rate to the inflation rate. And you can clearly see that the bank rate now is above the inflation rate. The inflation rate has come down significantly as, I guess, peaked back up again. It's gone up a little bit, and I think that has a lot to do with recent spikes in oil prices, recent prices at the pumps going higher, and that has caused inflation to move higher. But the Bank of Canada rate is still higher than the inflation rate, and that tells me that if things do get worse, if the economy does get worse here in our country, that the Bank of Canada has some room to cut rates. And there was talk that interest rate cuts may happen as early as maybe mid-year, spring, summer. So we'll see if that happens. But for now, as I mentioned, as long as we can get some certainty with respect to interest rates, I think we can start to see better growth in the economy. Hopefully, the Bank of Canada does not look at better growth as being inflationary. I think you can have growth and still not have it inflationary. So instead of having little growth and higher inflation, hopefully we can turn it around and have higher growth and lower inflation, the opposite of stagflation. I think we will get there. We just need some certainty with these interest rates.